Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Denise Shull. She's the founder and also performance strategist with the ReThink group. We're going to learn how to recognize valid intuitions and divert impulsive urges with our trading and to discuss trading psychology. Overall, Denise, it's great to have you back on the show, and I can just imagine what your clients have been coming to you with as we've traded some of the most volatile markets that we've ever seen.
Yeah, thanks so much for having me. It's certainly been an unusual time in many, many regards.
Yeah, it certainly has. And I want to pull up your presentation here. We'll take a look at the first slide. And this is where you're discussing old views versus new views. Walk us through that.
Yeah, so people don't realize that the brain research is exploding. So we understand how we make trading decisions differently as we learn more about how we really think. So there's really two views in trading psychology. The one everyone knows, which is plan the trade, trade the plan, use your discipline, emphasize your thinking and analytics. But the new view, which I think is more helpful, frankly, is we understand we're always unconsciously predicting. And we're using what is this situation we're looking at, market or not, it doesn't matter, that's the way the brain works. But in a trade, what does this really mean to me? And we're constantly judging how confident we are in our analysis. So if you start to orient your own kind of working with yourself and your psychology towards this realization that you're predicting and you're judging your confidence in that prediction as to what it really means to you personally, it gives you a better lever. It gives you more power as you're navigating the sort of crazy, unknowability of what price is going to do.
All right, let's move along here and take a look at trading tips that you have to help traders get through the day, and particularly markets like we're seeing right now.
Yeah, so what's come through this volatility piece is I found myself with my hedge fund clients really keeping them centered in the hedge fund world, they call it conviction, but it's like an extreme form of confidence, right? But helping people know what they believe about the market, what they believe about their way of analyzing the market, and sticking with it. People have a tendency to deviate, particularly as volatility. Volatility is like a provocative child or a dog, it's always pushing at you to do something. If you know what you believe and you stick with it, you do better, period. Now, within that, you can get really practical about focusing on your exits and making your exits better. And in doing that, you can think about creating principles for why you have a stop loss. Is it just your risk reward calculation? You want to risk 1 to make 3 or risk 1 to make 5 or whatever? Or are you trying to stop yourself from losing more, which is a literal interpretation? But people don't stop to ask themselves what they believe about how a stop is supposed to function, what it's supposed to do for you. And if you go through that exercise, why do I have the kind of stops that I do, then you have a fuller set of beliefs that helps you when the market is provoking you. Yeah. Now, in crazy volatility, it doesn't make any sense to have the same sort of stop as you would have when the market's not volatile. So what I found and what my clients find, and frankly, the other day I had a conversation with a hedge fund guy, average true range, how much is it moving in a period of time, is really the trader's version of the hedge fund volatility. But it's the same thing. When you're thinking about your stops, you need to account for how much the market's moving in your time frame, because it just doesn't make any sense to have a tiny stop when the market's moving in a much larger range. So all 4 of these things, I think, are something that could basically help just about anyone make a little bit more money, if not a lot more money.
Well, let's go to your final slide here and being realistic about it. How can you control trading moves and not your emotion? What do you physically need to do to be able to execute on that?
You need to put the feelings into words. I mean, this is it drives me crazy, because everyone says control the emotion. And the more you try to do that, the more likely that emotion is going to overwhelm you and you're going to act on it at the worst possible moment. So if you think of your emotions as information and as a catalog about yourself, and you start to learn what your own reactions are, actually putting those things into words. I was tweeting with someone this morning about just journaling their fears while they're in a trade. Because if you're writing about the fear while you're in the trade, you're not going to jump out early. Or let's put it this way, the odds that you jump out early go way down. All you have to control is what you do, not what you feel. And then when you do that, when you start to get more cognizant and more articulate about all of the feelings you're having, you're able to find your intuition. You're able to find that unconscious pattern recognition. Intuition has a bad name in many ways, but there really is something called visceral intelligence, like intelligence based in your body, that it is your expertise. You know, the more of an expert you are, the more your knowledge exists is in a physical form. So you want to be able to access that. You want to be able to access when you're sensing that the average true range is about to change, for example, like volatility is contracting before it becomes in the numbers. So if you think in terms of understanding all those feelings and emotions as a data set, and you want to get to know your own data set, you'll be more effective in making market decisions. I know we put up Trader Brain Exercise. It's something we developed a while ago. It's a way to actually practice like feeling your intuition, and traders tell us they find it super helpful.
It sounds like something that you could take beyond your trading as well, particularly when you talk about cataloging and writing down what you're thinking and feeling. As human beings, we tend to act on impulse, which is why they'll say, you know, if you're arguing with someone or if you get an email and you feel like you need to respond and you don't want to regret it 5 minutes later, you know, write things down,
right.
Get your emotions out there versus being impulsive. This extends way beyond trading. I mean, you could take this into your personal life.
I've had multiple clients over the years say, like, come back. Like, I had one portfolio manager in Europe. I had a really good relationship with him. You know, it ran its course. We stopped working. He called like a few years later and said, my wife said, can you please call Denise? And I've had that happen a lot. I mean, the truth is, if you go back to the first element we were talking about, where neuroscience is starting to show our brain works differently. Well, then, I mean, it works differently in, you know, all the time, not just in trading, like you're saying. I think a superpower, well, I know that a superpower of performance in any regard is being able to answer, what am I feeling and why am I feeling it, and get the answers right. Now, even the effort before you get them right, just what you were saying, like stop and try to understand that before you act out. Because the impulse is just acting out a feeling without examining it, just exactly like you said.
All right, Denise, great to catch up with you as always. Thank you so much for joining us on Trade Talks.
Thank you for having me. Good luck.
All right, thank you. And
Bye.
Thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.